Welcome to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Dollars and Cents is the show about growing more of what you are making, saving more of what you are growing, and making more of what you are growing and saving in the most sensible and tax-efficient manner possible. Feel free to call into our studio number to be live on air with your questions. Call 408-912-5038. That's 408-912-5038. 5038. And here is your host of Dollars and Cents, Sanjiv Gupta, CPA.
Good evening, friends. This is your own CPA, Sanjiv Gupta, CPA. In our dollar update of the show, for the first time in nearly 4 years, the Federal Reserve increased the price of borrowing money by a quarter point today and announced plans to keep raising rates this year, which we are expecting, by the way, which we have been telling on air a few radio shows back, the Federal Reserve are contemplating raising interest rate at least 3 to 4 times, maybe 0.25%, 0.25%. That's what's going to happen. And you know what is going on in Ukraine. Today, Ukraine president talked to the US Congress. It was, I saw that live telecast. It was very good. It looks very emotional. It was well presented. Of course, they are suffering a lot. And he was all appreciated by all the members of the Congress. It was worth seeing it. But whether that will increase inflation, whether that will create more problem for the economy, that's a billion-dollar question, which we definitely have to wait and see what happens next. But meantime, in the US, the Federal Reserve today increased that borrowing money by a quarter point. Whether it's going to increase the interest rate on your home mortgage loans, well, it does not increase immediately because, as you know, mostly mortgage rates follow the 10-year Treasury yield, and rather than the federal funds rate. So the 10-year Treasury yield definitely is more stable. But yes, you can see up and down in the interest rates, but it's not going to climb so much based on that. If your money is stashed away in savings account, definitely you will see some better interest rate, not that horrible 0.5%, 0.6%, or even, in fact, I've seen 0.3%. So might be seeing some sense you will get because of that increase by 0.25%. What about the credit card debts? That will be the most affected by this increase in interest rate. And credit cards are almost certainly going to rise with every federal rate hike. And some might even see their APRs, which is annual percentage rates, climb at faster rates than others. As you know, the credit card companies do charge a margin on top of the prime rate, which is generally 3 percentage points higher than the federal funds rate. So you can see that the rate will be higher for those cards. So it's time to look at your credit card payments. Make sure you don't just pay the minimum balances, pay more than that, and try to, if you're possible, instead of putting money in the saving account and doing nothing, try to pay those off the credit card. This is time to look at those credit card payments. Like I said, the Federal Reserve is going to increase more every quarter. Of course, we see the inflation is climbing up and up. And it's really a good measure in time to control those inflations. Listeners, this is Sanjiv Gupta, CPA, giving this show Dollars and Cents every Wednesday between 6:30 p.m. to 7 p.m. If you have any tax question, this is the time to connect with the CPA on air. Studio lines are open. Studio number is 408-912-5038. Studio number is 408-912-5038. 408-912-5038. I know this is tax season. We just finished S Corporation LLC tax returns yesterday, and I'm going to touch a few things in our dollar topic of the show about S Corporation LLCs, which I think will help a lot of listeners to mitigate those regulations a little better, which we have seen this tax season. So we're going to talk about that in our dollar topic of the show. My firm, Sanjiv Gupta CPA, has 3 offices in Fremont, Sunnyvale, and Pleasanton. And we have a team of experienced CPAs, CAs, EAs, and accounting professionals. So not only well knowledgeable, experienced on US tax rules and regulations, but also with Indian tax rules and regulations. In fact, we have been very much instrumental in helping our clients comply with all the international rules and regulations when it comes to FBARs, FATCA requirements, filing of other tax returns, 8621, all the 9 yards of the tax forms, foreign tax forms. In fact, we are doing a live a webinar happening on this March 26th. Mark the calendar, March 26th, Saturday, between 10 to 12. It's a live webinar. It's a free webinar. It's on foreign account reporting and foreign account and income from those foreign asset reporting requirements, which is still a big question for a lot of people. So if you're looking for ideas on how to get compliance with respect to non-disclosure of foreign assets, like mutual funds, PPF accounts, foreign bank accounts, insurance policies, stocks, and what have you, and you're not sure how to do this and are very afraid to report it for the first time, this webinar is for you. By the way, this webinar is a very popular webinar. We always have full capacity. In fact, we have to increase the capacity every now and then, and we are seeing the same pattern this time around as well. So don't delay. For registration, go to my website, sanjivcpa.com, SANJIV, sanjivcpa.com. That's my website. For registration, you can go there and get yourself registered for this upcoming webinar on March 26th about foreign account reporting and income from those foreign assets. Of course, when in this webinar, we do a lot of interactions through chat window. Last webinar we have about 86 questions from different participants, and we answered all those. By the way, we get a lot of those questions on the chat window, and it's very interesting to see how many questions are there, which relates to diversified areas. Listeners, if you have any tax questions, this is a time to connect with a CPA on air, Sanjiv Gupta CPA, 408-912-5038. 408-912-5038 is your studio number, and you can connect with me on air with any tax question that might be coming into your mind. It's a tax season, and you're not looking for an answer. You may not get an answer. A lot of questions do come in the area of unemployment compensation, stimulus payments, real estate transactions, foreign account reporting, K1s from different entities, Schedule C business owners, 1099s, PPP loans, ERC, name it. So many things have happened the last 2 years. That is, if I keep talking about those, it will take a year to go through those changes. Myself, not only a CPA, but also an experienced chartered accountant, having practiced in India for the last 12 plus years before coming to US, and have been practicing in the US for, I think, mostly like 20 years now. My firm has been dealing with complexities of reporting different kinds of tax requirements. We see those changes. Like I said, it started with Tax Cuts and Jobs Act, then it went to Secure Act, then it went to CARES Act, then it got to PPP loan portability and other acts, and then we see the American Rescue Plan Act, and lastly we saw that Infrastructure Jobs and Investment Act. Hopefully we will see more changes this year. Build Back Better plan, of course, is not on the back burner, right? Maybe it will come out. The Russia invasion is more forefront in that one. So if you're listeners, if you have a tax question, it is a time to connect with the CPA on air. Sanjiv Gupta CPA, 408-912-5038. 408-912-5038. My website is sanjivcpa.com, SANJIV, sanjivcpa.com, which contains a lot of up-to-date tax and financial information. A lot of people go to my website, they get a lot of information, and they do tell me that it's fantastic. The information came to me, and I was able to do myself a lot of things. So the whole reason why we have those informations is to help you out in dealing with complexities when it comes to taxes. And the website can also be used for registering to the upcoming webinar on March 26th on foreign account reporting and foreign asset reporting and income from those foreign assets. 408-912-5038 is the studio number. Call in with your questions if you have anyone. Let's go to our dollar topic of the show. In our dollar topic of the show, we are going to talk about S Corporation LLCs. We just finished the tax filing season for S Corp LLC yesterday. We have a lot of extensions. Of course, a lot of people do file extensions. And a lot of things come up during this time. Few things that come up I want to share with all of you, which people like to learn and understand. First thing is, when you file an extension, the extension gets rejected, and the main reason for rejection comes in the entity type and nature of the entity is not in sync with the record of the IRS. And that's a very, very common thing that happens with rejection. So you are thinking you are an S corporation, and when you file, we have a caller here. Let me take this call quickly. Good evening, this is Sanjiv Gupta, CPA.
Hey, good evening, Sanjiv. Thanks so much for answering the questions. And so I had a quick question. So basically, if I'm filing my taxes over here in the U.S., do I need to disclose any of my investments in terms of the real estate or stock market, anything like that back in India?
Yes, very good question. So real estate does not need to be reported on any form because real estate is a immovable property. It does not need to be reported on any form, foreign forms. Only thing is we have to understand is the income from the real estate, because the rental income that needs to be reported on Schedule E, like we report here, the rental income. And if you have stocks and bonds and mutual funds, which are liquid assets, movable assets, which are important foreign financial assets, we have to report those assets on FBAR. And if the balances in them together exceed $100,000 on any day in a year, if you're married filing joint return, definitely you have to file the FATCA Form 8938. And if you have mutual funds, you have to also file the Form 8621. So if you are aware of those rules and regulations, do go ahead and file the return in that manner. Okay?
Right. Perfect. Thank you so much, Sanjiv. Appreciate it.
Thank you. Yes, listeners, if you have any tax questions like this or any other questions, burning question in your mind, connect with me on air, Sanjiv Gupta, CPA, 408-912-5038, 408-912-5038. Now let's jump to that discussion on the S Corporation LLC. So we saw that a lot of rejection do happen when it files extension for S Corporation LLCs. And like I said, the nature of the rejection is the entity nature and type doesn't match. Why that happens? Well, a lot of people think they are an S Corporation because in their mindset, they think, oh, they formed the company as a S Corp. But in actual fact, they are not an S Corporation. So what happens in that case? Since you are not converted the regular corp, when you incorporate with the Secretary of State of any state, the default corporation is a C corporation. You need to convert to S corporation. You need to file some document with the IRS, and you have to wait for the IRS to come with a decision. Don't just go ahead and assume that since you file some forms, you are an S corporation, but you are not unless you receive that letter from that IRS. We have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA. Good evening, this is Sanjiv Gupta, CPA, please. Go ahead with your question. Hello. Yeah.
Hi.
Go ahead with your question. Hi.
Last week, I received a letter which says that last year, if I received a stipend of $1,400.
Yes.
But I never did.
Okay, that will happen a lot. That is happening a lot too. That's $1,400 is stimulus payment number 3. We call it economic impact payment number 3. The 3 economic impact payment happened last year, last year. So that's for the third one, which is $1,400. And like I said, IRS is going. There are a lot of things to process, and there are certain errors do come up with that system. Don't worry if you did receive that letter. If you have not received it, go to your bank statement, make sure you have not received it, And if you're not received it, don't worry. You can go ahead and file the return, ignoring that notice, and like you've never received it. The IRS will collect it when they process your return. Okay, you don't have to worry about that.
Okay, so will we be getting that, or like if we have
Yes,
to pay,
you will
will
get it.
we
You will
subtract
get it.
that?
You will get it. So what happens is if you have not received those payment, you file the return for that year, ignoring that letter and claiming that amount, and you will get it. They will process it and ignore that letter. Okay.
Okay, thank you so much.
Thank you. Thank you. Really appreciate for the question. Listeners, we have 10 minutes left for the show. Studio number is 408-912-5038. 408-912-5038. For any tax question, you can call Sanjiv Gupta CPA right now on air. So when it get rejected with the when it get rejected, the extension get rejected, the S corporation election is not valid because they have not received it. So what steps you should take in that case? In that case, it is always better to file extension as a C Corp and sent a notice of and sent an extension 704 and mail out and keep a certified record of the S corporation. Or the another option can be file the S corporation with the form 2503 with a late election on that form and try to again file it. E-file it again, it will be rejected. That's okay, but then mail it out with those forms. So that's one way of getting around that filing requirement. And by the way, calling IRS is a hell of a job. I know that. We have a caller here. Let me take this call. Good evening, this is Sanjiv, the CPA.
Yeah, hello Sanjeev ji. My question is for the Form 1120S for this corporation. The California grant income is now part of the taxable income. Is that right?
Yes. So California grant income is not taxable for California, but it's taxable for federal. Okay. So don't ignore that aspect. There are a lot of things have changed last year for when you do this taxes for S Corp and LCs relating to PPP and grants monies and new forms coming to 7203 and K2, K3 forms. All those forms are there. So when it comes to California, the grants, you don't have to report on the 568 on the California return, but you have to always report it on the federal side. Okay, but California is exempt for 25,000.
And it is a taxable income then on the federal.
Yes, it's a taxable income for federal, not for California.
And one last question about the PPP loan. Is it exempt from the federal and also exempt from California, or is California treating the PPP?
Yeah, so it's a very good question, and I want to spend the time. So there are two PPP loans, PP1 and PP2. PP1 is exempt on both sides, okay, federal and California. On PP2, it's not exempt on California side if the drop in revenue is not more than 25% of the quarter for which you got PP2. Now, there has been extension of the PPP2 loans. The federal extended the period in March 31st, 2021. They extended that you can use that money for not for 8 weeks. You can use as much as you want, up to 24 weeks or up to the money got exhausted. California has not come out with that form, and it's making things complicated. So just to give you a simpler way, if you think there's a drop in revenue more than 20%, 25% in the one quarter, you can take it exempt in both sides, federal and California side. Okay.
But on the PPP loan too, the reference will always be 2019 and not 2020, right? Just like PPP loan one for that 25% drop in revenue.
Yes, reference will be comparing. Yes, reference period will be 2019. Yes.
Okay, wonderful. Okay, thank you, sir. Thank you so much.
Thank you very much for the call. Listeners, this is the time to connect with me. 7 minutes remaining for the show. 408-912-5038. And we have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA.
Hi. Yeah. Hey. So thank you for taking the questions. My question is, with the companies going completely remote, last year you just really no choice, but then this year my company decided to actually go completely remote. Can we claim any deductions as such for the home office?
No, and I will It's again a very good question for all the listeners who are working from home. They think they can deduct the home office expenses on their tax returns, and the answer to that question is no. The remote work is done because, of course, the client, you can come back and say, hey, I'm working from remote because the client, your employer wants you to work from home, but that is not so. It's on both sides. You also don't want to come out and work. So it's not just the employer requirement, it's also your requirement. So you cannot claim home office expenses on your tax returns when if you don't have a Schedule C business. If you run a business, then definitely there is a requirement that you can deduct those home office expenses. There's a special schedule on Schedule C, and also for 1120S and 1065 returns, you can claim those home office expenses provided you qualify those expenses. But if you don't have those businesses, definitely don't qualify for those home office expenses. And please, I request all the listeners, don't claim them on your tax returns. Okay.
Okay. Okay. And yet, this is true completely remote. Let's say they don't have any offices. This is true in that case also, right?
Yes.
Okay. Thanks. Thank you so much.
Thank you for the call, listeners. We have 5 minutes to the show. 408-912-5038. 408-912-5038. So coming to this rejection, so I told you one way out of recording or reporting for S corporation, weighing out when it got rejected. What about LLCs? Now, LLCs can be single member, multi-member. When you file as a multi-member LLC, but you are basically a single member LLC, and letter says sole member, and you're filing 1065, of course, it will be rejected. So you have to go back to your EIN letter and find out what's going on. We have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA.
Oh, hi. Can you hear me?
Yeah, I can hear you. Go ahead with your question,
Okay.
please.
Yeah, hi, this is Tariq, and wonderful show. Thank you for doing this for us. I have
No
a question.
problem.
I basically used to have a C Corp, and I dissolved that last year. And basically that resulted in some losses, right? So
Right.
how much, and how can I do this? Can I carry some of those losses and get that deducted in state and federal from my W-2, or, how does that work out?
Well, if you dissolve the C corporation and there were losses in the C corporation, definitely can't claim it because you not carry forward is you're ended that period. But you have to find out why the loss came in. Why there's a reason for that loss. Is that loss coming because you put money in, you have expenses that overflow your money, so that means there's an investment loss. And when there's an
Yes, it
investment
is.
loss,
Exactly.
and when there's
Yeah.
an
So I
investment
put the
loss,
money in that, and basically we didn't get
yes,
anything
it's
out of it. So
when there's
it's a total
investment
loss.
loss, then the workaround for that will be you can work on Schedule D as a bad debt for your investment, and you can claim $3,000 every year, and you can carry forward that one. Okay.
I see. Great. Thank you so much.
Thank you very much. Thank you for the question. We have 4 minutes to the show. Listeners, this is a time to connect with Sanjiv Gupta CPA on air, 408-912-5038. 408-912-5038. So coming to those rejection notices, we talked about S corporation rejection, we talked about LLC rejection, single member versus multi-member. Now what happens with those corporations which have not filed? Now why this happens? This is a very common scenario that happens. People are always in a hurry to incorporate their business, but they don't do any activity in those businesses. For example, they form a company, their idea came to their mind. They have some people to do that work. They say, well, let's go ahead and form LLCs. They went ahead, incorporate on the website, incorporated LLCs immediately. But that did not turn out to be something that what they thought is going to be there is not there. What happened now? Well, since they formed the LLC, if they applied for EIN number and they got the EIN number for the LLC, it's a requirement to file the return. So don't forget that. Okay, if you don't file the return, you will get penalty notice. You have to file the return for a corporate and LLC, irrespective of whether you're doing any activity or not activity. If you incorporate the business and you don't go do any activity, you have to dissolve the LLC or on the corporation. If you don't dissolve it, you'll be subject to Secretary of State filing requirements, you'll be subject to franchise tax board requirements, you'll be subject to IRS requirements, and that will haunt you. Not now, 2-3 years later with all penalties, and you will be in a bad shape that time, and you will pay a lot of things. And I tell you, this happens a lot. So if you are filing some activity, if you have a S corporation, make sure that you file it on time. And we're going to cover more on the next Wednesday, same time, 6:37. I will meet you again. It's a tax season. Bring out all those questions and connect with me on air that time. Thank you.
If you have any questions about the program or its related topics, you can get in touch directly with Sanjiv Gupta CPA by calling 510-825-7563. That's 510-825-7563, or visit sanjivcpa.com.